Okay, everyone, thought I'd do a second video today, just a quick one. I'm going to do a subscriber stock picks video. So I'm going to go through various stocks that subscribers to this channel have left in the comments for me to look at. We're going to cover a couple of those and then we'll wrap up. We'll start off here with the general markets. Let's look here at Qs. You can see here the main thing is bearish rising wedge right there. Let me mark this upper end in the green, I guess. Bearish rising wedge right there. Negative divergence on the RSI and the PPO, signaling a trend change is likely. We're waiting for that signal, that sell signal that the trend change is actually happening. We didn't get it this week. You can see we're just still within that apex of the wedge. So until we get a breakdown and a sell signal, we remain in the uptrend. SPY, same deal. SPY, we basically have coming off the March 2020 lows, this bearish rising wedge marked out in green. We broke it here, and we've been back testing really ever since. And now this blue line that I have had marked out going on the weekly chart all the way back to 2009. There's your 2009 lows. We just rock up that. There's your bull market trend line. You held support all through here. You can see all the reactions where he held support. Broke the bull market trend in 2018. A lot of people don't realize that. They think we're still in a bull market. Which, yeah, if you look at just price as of today or you know, this recent price, yeah, that's a bull market. But if you go back to March, you know, you're a bear market. And then 2019 was a bull market, and then 2018 was a bear market. This is a volatile pattern. It's called a megaphone or a broadening wedge pattern. And it's signaling it's a topping pattern. Now, it's happening on this big long-term time frame, the weekly chart, so it takes many years, basically. And that's what we got going on is we're putting in a big broadening wedge topping pattern that has taken many years. The next move that this would signal would be a move down to the bottom, below the March lows, basically, of 2020. Now, we're not going to plunge straight down there. If we're going to do that, it's going to take time. We're going to work our way lower. But this trend line, the blue line, held resistance when we broke. That was the COVID high. That held as resistance right before the COVID drop. And we are right there right now. So you can see we're right in that area. Okay, so this is going back to the hourly. You can see basically on SPY, we're just chopping around this resistance line. And until we see a signal, some sort of a breakdown, the trend is up. So that's it. But the things to note, trend is up, momentum is down. On the daily, you can see here, big negative divergence. This negative divergence is signaling we're going to have a big drop. That's what it says. Doesn't mean we're going to, but it's signaling that. You can see back here, this is what the negative divergence looked like last time we had it. Back here in late January of 2019, 2020, right before the COVID drop. And, you know, if you couldn't see the big COVID drop, the market just looked like this. It was just running up, hitting this resistance line, just chopping around. Everything looked great. And you can see right before the COVID drop, we were just right there at the resistance line, just kind of chopping, doing nothing for about 2 weeks. And then we got the big drop. So, again, the momentum was telling us that drop was coming before the drop happens, and that's what this momentum is telling us now, that the drop is coming before potentially it happens. Doesn't have to happen that way, but that's what, you know, that's where I'd be looking for the trade. That's where I'm looking, is obviously to the downside. Someone asked me to point out IWM. So let's look at the bigger picture with IWM. IWM, this is coming off the 2009 lows. And you can see it looks very similar to SPY. Yes, we undercut it here a little bit. It's not as clean of a chart, but we did formulate a pattern of support right through here. So held support, tested it many weeks, all through here, and then we broke in 2018. So common theme is the SPY, the IWM, many of the sectors actually broke in 2018. Their bull market pattern. The only sector that didn't break, which happens to be, I think, one of the most important sectors, is technology. So Triple Qs did not break its bull market trend line, and it has remained in a bull market ever since 2009. But we broke here in IWM in 2018. The Fed did their little magic trying to keep the market up. And recently, the COVID drop, this thing's been on just a tear straight up to the right up to that trend line. So we're basically there. If you go to the daily, you can see we pretty much tagged it, and we're just kind of trading around this level. So we could obviously overshoot it a little bit, look for some stop running. You know, anybody that's shorting, you know, you potentially want to shoot over and get everybody out of that. But I don't think there's a lot of shorts in the market, to be honest. So I think that in reality, there's really just momentum buyers, and we're at major resistance. So looking for a sell signal on this one. You know, on the hourly, we've got this price channel. We've had a couple reactions right here. I'm just looking for some sort of an impulsive breakdown on the daily chart, and it should be congruent with a breakdown in tech and the SPY. You know, look for them all to break down around the same time. The IWM, now it does have negative divergence. You can see here, look at the PPO. That's sloping down. So momentum is dropping on the PPO while price has continued to just run higher. And if you look at the RSI, it is as well, just a slight downward slope on the RSI while price has continued. So this is divergent high price action all pretty much through, you know, there. Signaling a trend change is likely. We wait for that sell signal, and then we ride the trend. Someone asked me to check out Zoom. I don't have the clearest read on this one. It could be bull flagging. You know, this might have been a big bull flagpole, and then we're flagging out right up here, and we're going to break to the upside and make another huge run. That's one potential. We did have negative divergence on this one back a while ago. This was your negative divergence right there. So you can see previously in this price action right up here, we continued to make new higher highs, and yet momentum was lower and lower. So that was your negative divergence, signaling a trend change was likely. We also had this upward kind of price channel that we broke to the upside and have now failed and broke to the, you know, broken down. Not impulsive yet, but we'll continue to watch that. That was your negative divergence. So that was signaling a trend change was likely. And from the high there all the way to the low, it did drop 43%. So that might have been it to satisfy that negative divergence, because recently we had bullish divergence right here. I have it marked in red. You can see if I zoom in right there, we made higher high in the momentum, and yet it was on a lower price. Let me mark that out. This price right in here, that was a divergent low. See the momentum, how it's higher and the price is slightly lower? That's bullish divergence, signaling a trend change is likely. The trend line that I had was right here, and we did break to the upside. So again, you know, mixed signals. As of right now, I would say this thing looks bullish. I think if I had to pick a side, I'd probably go bullish. I don't know if I'd want to buy it here, maybe buy on a back test of this trend line down in this area. Yeah, that's kind of my general read on it. Because I don't see a negative divergence. I see bullish momentum right now. I see bullish price action in the short term at least. Now, we do need, you know, it would need to get above this. You want to get above this previous high right here at 46. Because if you can't get above that, then you're still downtrending. You'll see that you're making, you know, you made a high, a lower high, lower high, lower high, and a lower high. And we are turning down. So until you get above this previous high right here, I would say, you know, watch it with a grain of salt. Now, you did make a lower high here, and we have broken above that. So, you know, we might hold support right in this area, right where it's at, and start to move higher. You know, if I had to lean one way or the other, I'd probably lean bullish on this one. Someone asked me what my thoughts are on UVXY, which is volatility. So UVXY is one thing to note. All right, UVXY is an instrument to trade volatility. It's not the best for charting volatility, but it's something to trade. Now on UVXY, we do have bullish divergence. You can see right here, we made a new lower low right in this area, and momentum did not make a new lower low. It's a higher low. So bullish divergence on the you know, on the momentum. But to chart this one, I would look at the VIX. You know, we look at the VIX and then we buy the UVXY to take positions on that. On the VIX, really what I'm looking at is this longer term zone that we're in right now. This was an area for many years that proved, really through the entire bull market, to prove to be the area of volatility where it was pretty much contained for the bull market from coming off the 2009 lows. Recently, we gapped up, ran higher, and we've now been trading above kind of the upper area of volatility. And so, you know, volatility is elevated. Even though recently it's kind of subsided, we're down near at this support area, which is about where this gap is at. You can see the gap at 22.10. Where did we close on Friday? 22.10. So we're basically right there. I can see volatility spiking again. And while we stay elevated in this upper range of volatility, look for volatility to you know, continue to spike. And that's congruent, going back to the SPY, from my picture, that's congruent with what we're seeing here in this bull market. Here's the 2009 bull market, but look at the volatility we've had over the last few years. Big drops, big spikes, big drops, big spikes, big volatility while we remain elevated. And just flipping back to the VIX, you know, we're elevated basically with volatility. And so, you know, volatility is at support. You know, I think it's likely that we're gonna go higher in volatility from here. UVXY, we do have this downward price channel here on the weekly, and if you look at the daily here, it's basically just right down here. Just been kind of walking down there, so I could see UVXY dropping all the way down there to, you know, 760 or so. That's where I'd be looking to buy it if I could. But again, the VIX is right there at support, so who knows? We could just chop sideways a little bit and then spike. If I had to pick one, I would say volatility. You know, I would say UVXY is going to go higher from the area that we're in. But we got to wait for those sell signals on the market. Let's take a look at Rio Tinto. I know this company well. My father actually worked for this company, I don't know, 15 years ago, or it's a while back. But they're for the most part an iron ore miner. So this is an infrastructure play. It's a commodity play. And we'll look at the chart here. So on the daily, you can see this thing gaps around a lot. You know, going back on the daily, clearly in an upward, you know, an uptrend, bottomed out here in 2016. Looks very similar to gold, basically, in some of these gold miners. You know, where the bull market or the bear market ended in 2016. Been uptrending ever since. Looks like we've got a level of resistance, which is likely going to be support right down here. Kind of this zone, I would say around 63.73. On the daily chart, you know, yes, it is a divergent high right now. However, it's pointed up. You can see the RSI is just pointed straight up. So no confirmation on this yet. To get confirmation, what you want to see is the RSI turned down. All right, if the RSI turns down and puts in a new lower high, a new lower peak, then that would be negative divergence. As of right now, everything's pointed up, and so we can't say that's confirmed negative divergence, even though as of right now it is a divergent high. What I'd look for on the hourly is we do have some negative divergence here on the hourly chart right there, where this high right here is a divergent high, and then this high is a continued divergent high. So we're diverging in the hourly, signaling a trend change is likely, but this is just the hourly chart. So usually the hourly is only good for smaller drops. So what does that mean? Well, maybe we drop to fill this gap down here. It's about a 5% drop. You know, well, from where we're at, that's maybe about a 7% drop. You can see, yeah, about 6-7%. At 83.90, maybe that's where it holds and then continues. Again, I'd be looking for, you know, so we could see that we have this upward channel. If that breaks, I think it's very likely we gap fill. But again, that's just an hourly divergence. We don't have anything on the daily signaling negative divergence. Now, if we do break and turn down and hit that gap, we do it soon, we will have that negative divergence. So keep an eye on that. Otherwise, sky's the limit because I think it's at all-time highs and, you know, moving higher. Okay, let's look at Vislink Technologies, VISL. I don't know anything about this company. This is a subscriber's pick. All right, so clearly big bear market in this thing, really from, you know, this thing's been just a destroyer of wealth. And so I don't know what's going on fundamentally with this company. Looking at the daily, you know, I don't see, you know, I see here we made a low in price, and you can see here we made a new lower low in the RSI, but a higher low in price. And recently, uptrending in momentum, obviously, in an uptrend. I don't see anything that's really that bullish on this thing, to be honest. To me, this looks like it's probably going to fizzle out up near this high. We might overshoot this high somewhere around here, up around 675. Technically, I just don't see anything that indicates we're going to, you know, we're going to continue this trend. Now, one thing that could happen is we could spike above this high, run up, make some new price action up here around 15 bucks. It's hard to say because it's such a low price thing and the momentum is clearly up. So obviously it could run up and do that. But if it does that anytime soon, it's likely going to put in a negative divergence. So this is just a momentum trade right now. And it, you know, so as of right now, momentum is up. What I would look for on this one is just the trend line right here. And, you know, if or when that breaks, then you get out. But oftentimes these things, when they break, they gap down on you, and you don't get a clean opportunity to just exit. So, you know, a tag of the trend line, maybe around 385 or so, and if it should continue higher until it breaks. That's all I see on this one. Here's one, Genco Shipping and Trading, GNK. The first thing that I see in this one is the bullish divergence that was there back here. You can see that's bullish divergence where we made this drop right here, this big drop into the March 2020 lows, obviously, was a divergent low right there. See the momentum, how it was a higher momentum. So that was your signal that the trend change was likely. We've since had that trend change, and looks like they kind of gave you a second opportunity right there. But the trend has now changed, and it's an upward trend. So that's all I really see on this one as of right now. From a momentum standpoint, upward momentum, upward trend, no change in momentum, just that continues to be up. We do, as I scroll out here, we do have what looks to be like some resistance. We just recently hit it. You can see previously on this daily chart, it tagged it several times. It was a resistance zone right up in here at about 11 bucks. And recently they spiked it right up into that area, and it has been rejected. So, you know, what I would be looking for is either to buy down here at the trend line around 7 bucks, as long as the technical posture doesn't change, or on a breakout above this $11. If you get the breakout and it's impulsive and it sticks, then that would signal that we're breaking higher, and likely we're going to run up to next level of resistance, which is right here at about 15 bucks, and then you've got the highs right there at about 20 bucks. All right, so that's that one. Okay, that's all I got. Second video today, so I've done my work for the day on this. If you guys are interested in me covering a stock that you're looking at, leave a comment below. I kind of round those up over the week, look at, you know, try to find things that are interesting, and I'll put out a subscriber stock pick video. Leave me a thumbs up if you guys are finding value in the content. Check out my trading course if you haven't done so already. It will help, you know, improve your trading skills and your technical analysis skills. And it's a $99 course, so very cheap. I think it's a good value for improving your skills. Check that out. Link is in the description below on this video. And I will catch you guys in the next video.